This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview for the week of April the 27th through May the 1st. Man, where did that time go? Charles Roplet, our senior market analyst, here with me once again to take a look at the week ahead.
Is it too early to wish you a happy Cinco de Mayo?
No, it's not, but don't forget to do it again on the day because I'll be celebrating. Earnings pretty much into full tilt here now as far as first quarter reporting is concerned. I asked you this a while back and it was probably premature then, but I'll ask it again. Are the first quarter earnings going to be setting the pace for the stock market for the rest of the year?
For the rest of the year, I think not, and really not even setting the pace for the first quarter. If you look at volume over the last 2 weeks, it's been below average. In a nutshell, earnings have been uninspiring.
Right.
We're having mixed visibility from companies. I think companies are still kind of skittish and they want to see how things play out for the second half of the year. A lot of companies, though, they're cutting costs, they're able to get over the lowered bar, so that's a positive. But it's interesting when you look at what's happening with revisions over the last 2 weeks, when we look at all the S&P 500 companies, we've had about 60 companies with estimates revised higher after their earnings release, and 80 have seen their full year forecast being cut. That's a complete opposite from what we're seeing with positive surprises, where positive surprises are outnumbering negative surprises by a margin of 2 to 1. So they're beating, but those positive surprises are not leading to higher forecasts, which is not a good sign.
So have people pretty much said, okay, we're going to put a cap on first quarter here soon and begun looking out now to second, third, and fourth quarter as far as earnings are concerned?
Well, I think right now people are more concerned with the bank stress test. As we record this, the Fed came out, kind of said what they were looking at a little bit. People are watching Chrysler Fiat. I think it will have an influence on the market over the next 7 days. As we record this on April 24th, it's who knows when the deal will be done. We don't know if a deal will be struck over the weekend, or if we're looking at Chrysler possibly going to bankruptcy, then Fiat forming an alliance after that point. Yep. So I think people are watching that. Definitely people are watching GM. I talk about that again today in this week's earnings preview. The reason I bring it up is there's a deadline that's being quoted by some news sources that GM will talk to its unsecured debt holders by Monday, April 27th, with a deal to possibly do something about its debt. That deadline's looming as far as their bankruptcy and what they're going to do. And it's really not so much whether or not they go into bankruptcy, but really whether it's a clean bankruptcy and they're able to emerge from it quickly, or if things get messy. So I think people are worried about the banks and they're worried about the automotive makers, and that's really kind of holding stocks back a little bit.
Well, stress tests, we have the criteria that the government issued when we recorded today, but we don't have a lot of the details as far as the banks and what their condition is. There's got to be a no-win situation, because if the government comes out and says banks are fine, then everybody is probably not going to believe that. And if they say, well, there's worry here and caution there, that could reignite another panic again. So there's a real fine line that's got to be walked there, I think.
Yeah, I think what Gaither's really worried about is causing a run on Citigroup, causing a run on Bank of America. And I think he's, as much as possible, trying to prop up the bigger banks, or at least give people a sense that they're not going to go away. Whether or not that's a smart decision, that's really hard to say. I think what people really want, though, is they want a clear exit plan out of TARP. And right now, one doesn't exist, or if it does exist, the Treasury Secretary is really doing a poor job of articulating what that plan is. And so when we look at the banks, certainly you have some banks very eager to give back to TARP funds. Some banks are certainly in a position to give back to TARP funds. That's not universally the case. And it is a big cloud that's overhanging the markets, and it is a worry that keeps me up at night.
Well, we are going to get a look this week also at some economic news. One piece being the first quarter GDP. That's probably going to be a negative for the market, huh?
I don't know. It depends on whether it's considerably better or worse than expected. Everybody knows the economy contracted. Everybody knows it was really bad. What people are now starting to look for are signs of stabilization, and maybe a hint that maybe things are getting better. It is the advanced number. It is very much subject to being revised, and I think most people are aware of it. But we'll also be paying attention to what the Fed says and what their take on the economy is, and whether or not they think things are have not deteriorated as much in the past, and they see signs of recovery. So that will also weigh in on the markets.
All right, thanks a lot. Do you own any of the stocks that you talked about?
No, I do not.
Is it too early to talk about Cinco de Mayo? If you would like to see some of the companies that Charles thinks may be surprising to the upside, and at least one that could surprise to the downside, go to Zacks.com, click on the latest earnings preview headline, and you can get all of that information in the text version of this piece. With Charles Rotblatt, I'm Terry Ruffalo.